Here are the crypto top headlines covered in this video. Filecoin announces integration with Solana for decentralized blockchain storage solution. Next, VanEck admits ETF marketing violation, agrees to SEC fine. Also, Genesis GBTC sell-off will balance out in crypto market, says Coinbase. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube and would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Filecoin announces integration with Solana for decentralized blockchain storage solution. Peer-to-peer file storage network Filecoin, or FIL, is collaborating with smart contract platform Solana, or SOL, for decentralized blockchain storage solutions. In a new thread on the social media platform X, the team behind Filecoin says that integrating with Solana will greatly enhance the Ethereum rival's capabilities as well as advance the concept of decentralized storage. Solana's integration with Filecoin is a significant move away from centralized storage solutions and a remarkable step towards enhancing the reliability and scalability of the Solana blockchain. Solana is utilizing Filecoin to make its block history more accessible and usable for infrastructure providers, explorers, indexers, and anyone needing historical access. By leveraging Filecoin's decentralized storage capabilities, Solana can achieve data redundancy, scalability, and enhanced security while staying true to its decentralized ethos. This collaboration showcases the power of blockchain networks to create more robust and resilient ecosystems for the benefit of users and developers. In a separate post, Solana founder Anatoly Yakovenko says Remote Procedure Call, or RPC, service Triton 1 played a big role in making the partnership possible. I am really excited to see this launch. Huge thanks to Filecoin for building an awesome decentralized archive layer, and to Triton 1, who did a ton of work to ship this. FIL is trading for $6.24 at time of writing, an 8.54% gain during the last 24 hours, while SOL is worth $108.82 at time of writing, a marginal decrease during the same time frame. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, VanEck admits ETF marketing violation, agrees to SEC fine. The regulator noticed an undisclosed detail. The influencer's fee was tied to the fund's growth, guaranteeing higher compensation as the fund expanded. VanEck will pay a $1.75 million fine to resolve United States Securities and Exchange Commission charges linked to its 2021 launch of a social media-focused exchange-traded fund. The SEC imposed a civil penalty on the investment advisor. On February 16th, the SEC revealed in a statement that during the VanEck Social Sentiment ETF launch in March 2021, VanEck did not fully disclose the participation of a prominent social media personality in marketing the product. The ETF aimed to follow an index using positive insights from social media and other data sources. However, the SEC discovered that VanEck sought to boost the fund's success via social media and collaborated with an influential and divisive online personality to enhance its appeal. Although the financial watchdog didn't explicitly name the influencer, reports from 2021 have previously connected David Portnoy, Barstool Sports founder, to the promotion of the VanEck ETF. The regulator noticed an undisclosed detail: the influencer's fee was tied to the fund's growth, guaranteeing higher compensation as the fund expanded. The SEC criticized the hidden deal, focusing on VanEck's failure to inform the ETF's board about the influencer's intended involvement. This undisclosed arrangement had significant implications for the management contract and fund operations, violating the board's duty to oversee financial aspects during advisory contract discussions. Andrew Dean, co-chief of the SEC Enforcement Division's Asset Management Unit, stressed the need for transparency from advisors. He noted that the failure to provide accurate disclosures hinders the board's ability to properly assess the advisory contract and understand the economic impact of licensing agreements. VanEck's agreement to the SEC's order accepted its violation of the Investment Company Act and Investment Advisors Act. The company accepted a cease and desist order, censure, and the required financial penalty without acknowledging or denying the findings. The announcement follows the company's decision to terminate one of its ETF products, the Bitcoin Strategy ETF, a month ago after a thorough performance evaluation. In an apparent attempt to boost the popularity of its dedicated spot Bitcoin ETF, carrying the ticker HODL, VanEck signaled on February 15th that it was lowering its fees from 0.25% to 0.2% from February 21st. Our next top headline: Genesis GBTC sell-off will balance out in crypto market, says Coinbase. Coinbase forecasts that funds from Genesis GBTC sell-off would remain within the crypto ecosystem despite fears of potentially impacting Bitcoin's price. Cryptocurrency exchange Coinbase believes that the approval for bankrupt crypto lending firm Genesis to sell its Grayscale Bitcoin Trust, or GBTC, shares won't disrupt the crypto market. It argued that most of the funds will flow back into the crypto ecosystem, resulting in a neutral impact on the market. Genesis was granted approval by a bankruptcy judge on February 14th to liquidate around $1.3 billion worth of GBTC as part of its efforts to reimburse creditors. However, following the approval for Grayscale Investments to convert GBTC into a spot Bitcoin exchange-traded fund on January 10th, GBTC has experienced outflows exceeding $5 billion. There are concerns within the crypto industry that the recent approval for Genesis to also sell off GBTC shares could lead to additional downward pressure on the price of Bitcoin. Coinbase argued in its weekly report that while it's unclear whether the additional GBTC outflows will go into other spot Bitcoin ETFs or directly into Bitcoin to reimburse creditors, it believes the funds will likely remain within the crypto ecosystem. Our view is that much of these funds will likely remain within the crypto ecosystem, contributing to a neutral overall effect in the market. It explained that the rules of the bankruptcy plan allow Genesis to either convert shares of the GBTC into the underlying Bitcoin asset on behalf of the creditors, or sell the shares outright and distribute the cash. The confirmation hearing is scheduled for February 26th. Genesis holds 35.9 billion shares of GBTC, along with 8.7 million shares of the Grayscale Ethereum Trust, or ETHE, and 3 million shares of the Grayscale Ethereum Classic Trust, or ETCG. Meanwhile, it further highlighted that the net inflows for Bitcoin ETFs in its first 30 days surpassed those of State Street's SPDR Gold Shares ETF in its first month. Sam Callaghan, senior analyst at Swan Bitcoin, said in an X post that there will be some netting in the crypto market due to Genesis GBTC sales. However, Callaghan stated there is uncertainty over the number of creditors who will sell their Bitcoin holdings. Meanwhile, Bitfinex head of derivatives Jag Kuhner indicated to Cointelegraph that the significant discount afforded to GBTC investors was a primary driver for the high volume of share selling in recent weeks. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.